Trump seems to be taking a softer tone with China. Roll tape.
No, I'm not going to mention COVID. I'm not going to say, oh, I'm going to play hardball with China. I'm going to play hardball with you, President Xi. No. We're going to be very nice. They're going to be very nice. And we'll see what happens. But ultimately, they have to make a deal because otherwise they're not going to be able to deal in the United States. And we want them involved. But they have to, and other countries have to make a deal. And if they don't make a deal, we'll set the deal. Because we're the ones that set the deal.
We're the ones who set the deal. All right, John Lonski joins us this morning. John, the China deal is the biggest of big deals. If you can fix that, you can fix the whole lot.
I think you're exactly right, Stu. I mean, after all, the other tariffs are no higher than 10% in general. If you get rid of the problem with China, then I think Trump has very much succeeded in this tariff conflict, you might say. I think it's important to know, I think what they noted earlier is that we don't yet know what China is offering us in exchange for this offer to reduce tariffs to try to mitigate this conflict we have.
At this moment, it seems like the market and the economy depend entirely on what goes on with tariffs and what goes on with the Federal Reserve. Those are the two things that dictate what the market's doing.
Well, since Liberation Day, April 2nd, tariffs have been the biggest issue, followed by Trump's threat to get rid of Jerome Powell. Okay, even if that eases, though, we still have some questions. The questions surround what happens with the tax bill, what happens with deregulation. Let me tell you, one of the biggest problems we have with China isn't so much trade per se. It's the fact that we depend on China for goods, for materials, for pharmaceuticals that are critical to national security. And in order to take care of that problem, I don't think tariffs are enough. I think we have to look at changing tax laws, having tax incentives, so that companies have a strong reason to expand U.S. industrial capacity. Companies have strong reason to, again, produce pharmaceuticals in the United States or perhaps Puerto Rico, which was once the case.
Second half of this year, strong economy?
I think we're going to do better than we're doing right now, that's for sure. But I want to add that, prior to April 2nd, the consensus estimate for U.S. real GDP growth was just above 2%. For 2025, which was down from 2.8% last year. And one of the reasons why economists thought the U.S. was going to grow more slowly in 2025 was because of an anticipated drop in government spending, the government's role in the economy. Believe it or not, the past 2 years, real government spending has grown, I think, about 3.5% on average. And that's expected to go down to 2%, if not slower. You'll miss that. You're going to lose something. But that's long overdue.
Got it. John Lonski, thank you very much indeed.
Thank you.